times. So I'm glad everyone's here. In the interest of time, last year I failed as a moderator somewhat because I let some people talk on and on and on. So I'm going to be a bit more strict this year and try to limit the conversations so that we can cover as many topics as possible, and hopefully in depth as well. I'm going to ask my panelists to introduce themselves briefly, and then perhaps give a short opening statement on how they see the situation of investing in Asia currently, and just a brief overview from their experience. My name is Katsu Yang. I am the editor-in-chief at Asia News Network, and I'm pleased to be your chair this evening. Why don't we start from Burley? Not to pick on you or anything, but you're on the far side of the room, so you got to press the button.
Hello, everyone. Yeah, my name is Burley Alvarez from the Philippines. Actually, I'm the president of Kaunlad Lending Investors Corporation, a private, mission-driven micro-lending company that operates in the two provinces in the Philippines, which are Rizal and Pampanga. The company has the aim of providing microcredit to Filipino micro-entrepreneurs. The company upholds also a mission of providing affordable capital to unbankable individuals while operating an efficient and profitable business. Well, what I see in investing in Asia is something good because first, Asia has 60% population, and they increasingly have educated workforce. That's it. Thank you.
Thank you, Burley. Let's just keep going down the line.
Hi, I'm Pak Poom. Other than having worked as an engineer for about 5 years, the last 30 years I've been an investment banker, particularly in the last 20 years with a firm called the Quant Group. I do mergers and acquisitions, covering mostly Southeast Asia. However, that having said, it really depends on where clients take us. So acquisitions could be anywhere around the world. I am Thai and based in Bangkok, so a lot of the clients that I have tend to be Thai. We tend to focus on the larger M&A deals.
Thank you very much. Toyoshima-san.
Okay, my name is Toyoshima. I'm the CEO of Mercury Investment. The company was set up 13 years ago, back in 2005. After seeing China joining WTO, I was very much convinced of the global integration and expansion of the economy in the East Asia, and had the theme of investment cross-border. Now, Mercury is listed on the Tokyo Stock Exchange with around $2 billion and asset under management. Thank you.
Thank you very much. Let's just go down the line. Vanita, you're up.
Hi, I'm Vanita Bajoria.
Everyone can hear her, right? No?
Hi, I'm Vanita Bajoria. I'm from India. I'm executive director in Titagar Wagons. So we are an Indian multinational. We have units in France and Italy. We manufacture passenger trains and freight wagons, as well as we've recently diversified into shipbuilding and heavy earth moving equipment. So I'm very happy to be here with you and share my views predominantly on South Asia.
I think it's necessary considering everyone else here is East Asia and Southeast Asia based. So you might be our one sole voice coming from South Asia, which is a shame. Ken is not here, so just next down the line, Karina, please.
Yes, hello. Hi, everybody. Very happy to be here. Thank you for Races to invite me. So I'm based in Hong Kong, and I'm a founding partner of a company called East Capital, which is an asset management company. So we are specializing in emerging and frontier market equities. So we basically invest on the stock markets. We started 21 years ago in Stockholm, Sweden, and we emerged as one of the largest investors in Eastern Europe, actually, and especially Russia, where we still have more than $2 billion invested on the stock market. And then we decided to expand into Asia, and that's at the time when I moved first to Shanghai and then Hong Kong in 2010. And here in Asia, we only do investment on the stock markets, and I'll be delighted to share with you our thoughts in terms of outlook and what makes a market more interesting than others for investors, again, on the public equity space.
Perfect, thank you. Benedict, I guess you were last, but certainly not least.
Yes, good afternoon. I'm Engineer Benedict Ko from the Philippines. So I'm the co-founder and CFO of Wenceso McKay Construction, which is under the group of McKay Green Energy, wherein it's a renewable energy industry. Then our company, the construction firm, supports the plantation and warehouses needs. Initially, we started 3 years ago. So we were a fast-growing company from doing residentials to now mid-rise buildings and into land development, that's why I chose to invest in Asia to focus on the real estate boom in Asia.
Do you want to introduce your partner who's sitting next to you?
Oh well, this is Mark Lico, our CEO.
Thank you. It's nice to have you both on the panel. Okay, so I want to start with a very journalistic question, so it may seem a bit simple to all the financial people in the room, but it's something that we as journalists have been focusing on when we're reporting on the economy in Asia, which is there are reports that investment from outside Asia has slowed down compared to what it was in the mid-2000s, early 2010s. And now investment within Asia comes from other Asian countries itself. I want to open this question to the panel. Do you think that there is a slowdown in investment from outside of Asia, and do you think there is an increase in investment between Asian countries, among themselves, obviously? Anyone?
Well, may I start? I think, again, reminding you that I'm talking more on the public equity space in terms of investments, I think everyone has to realize that Asia has become the most important segment in the world for emerging market equities. Just 10 years ago, all of the Asian markets together, if you just add the market capitalization of all these markets, they were around maybe 50% of MSCI Emerging Market Index, which is the one that is mostly used by a lot of investors around the world that just do passive investments. We do active, but it's still very important for us as a way to realize and to see the flows. And today we're around 75%, and specifically with the emergence of China and the onshore equity markets of China, the so-called A-shares, we're going to be actually increasing even this weight further. And this is just, again, a measure of the interest. Here in that case, it's actually mainly about money coming from outside, overseas investors investing into Asia. So on the public equity space, your specific trend here, it doesn't actually hold true. Then again, we also have a lot of investments going on in Asia, which is something which is very good, about different countries implementing pension reforms, for instance, whereby there is more investment coming from the domestic markets as well into domestic equities, which is also very important for all markets.
It's interesting that you mentioned China, because when China opened up after the WTO, I think a large percent of investment within China, the China market itself, came from Asia rather than from abroad, because more people were willing to take risks. I mean, Toyoshima has experience there because he built his company basically on that. Do you want to expand on that?
Well, as I said, we started investment in China back in 2005, which was after China joining WTO. So joining WTO actually opened up the opportunities for many Chinese industry to shift up their production level or the technology levels. But the demand was coming from the global economy. I think for whatever business, of course, the business is about making profit and making the revenue. So it is important where you seek the new market is. So originally it was from the global market. But then I think the second phase was already, we could see the second phase moving on, which is the emergence of the medium income people and the Chinese economy becoming huge with 1.4 billion population. So China has moved from the factory of the world into the market of the world. But now, I think there's a third phase going on. Back in 2005, technology and the capital was still scarce, and there were a lot of appetite within China to look for the investment capital and the ideas for the growth. But nowadays, they have come to the cycle of reinvesting their capital gains or the big gains they have achieved in the first round. So there's no more scarcity of the capital. And as the market size, 1.4 billion, is giving the super high valuation to the big internet or big data businesses, fintech businesses, Alibaba, whatever, Baidu. So I think there are more foreign capitals who want to piggyback on the success of already leading Chinese industry, who's leading the innovations in innovative ways in the world. And what I see as the new pattern is that maybe in the future we will see more Chinese companies investment together with other Asian companies to invest in another Asian countries.
Yeah, just to add, what I have observed with the investment, not just in Asia but in the world. So first, the Western, they first started to be the developed economies, and then they started investing to the now developed Asia, which are China, Japan. And with your question that if it's slowing down within Asia or Western going to Asia, what's happening now is the slowdown is Western to China and Japan, and it's shifting now from China and Japan to Asia. I observed that just here in Vietnam. There is this the subway, JICA Japan Partnership Development Infrastructure, and also with the Philippines. There is also Japan Philippines infrastructure projects, wherein within Asia the investment is growing. And I think the Western now are also focusing on the emerging economies in Asia.
Thank you.
I think Karine touched on half of the capital flow equation. It's a bigger half. It's the public equities versus the private equity. And when I say private, that includes private equity as well as FDI. But I think on the public equity side, as you're asking about the slowdown, firstly, if you look at since the global financial crisis, we've had one of the longest bull run and a very bull markets generally going up above 200%, while earnings have only grown just about 50 or 60% only. So there's a decoupling of valuations versus the prices of asset prices on the public equity side. Partly, that is coming from capital flow from west towards east. But if you look at the risk right now in the market, I think the biggest risk is what I might term asynchrony, because in the past, we used to synchronously cut rates. If the US cut rates, we cut rates. If the US pump money, we pump money. But now, you're likely to see an uptick in interest rates in the United States. And as that reverses, where rates in the West goes up and in the East we're unable to necessarily raise the rates, the differential means that capital could flow from East towards West, thus the volatility. So for example, if you look at last year, you see that capital flows into emerging markets was still a positive $30–40 billion. This year, up to November or October, the capital outflow has been more than $150 billion in emerging markets, for example. And that's probably contributed to the slowdown on top of the curtailed GDP growth across the world, inclusive of Asia.
For various reasons, the GDP growth slowdown. Can we talk about the South Asian experience, since we only have one person for South Asia?
Yeah, so South Asia basically is driving growth in Asia because it doesn't only have 1/4 of the world's population, but it has 40% of Asia's population. And GDP growth rate has been consistently high over the past few years. And we saw a growth of 5.8% in 2017, which has gone up to which is projected to be almost 6.9% in 2018, and we are envisaging a growth of around 7.1% from 2019 onwards. So it basically domestic consumption is what is driving growth in South Asia. So we have a lot of advantages in South Asia, because of which, of course, we see a lot of investment coming in, whether it is from Asia itself or from the West. But because we have a total workforce of around 600 million people, huge domestic market, and consumption accounts for almost 20% of GDP. Then we have been seeing a sustained growth for the last 2 decades. There has been a very strong remittance from the South Asian migrants working mainly in the Gulf countries. So that again is a huge reason for investment coming into into Asia, because of these remittances. So, of course the stock market has been fairly stable for the last 2 years or so. Of course right now we are seeing volatility, but you know, that seeing the strong growth projections, etc., that should be more, in the short term, not sustained. So, and also there is a huge infrastructural need for infrastructural development, housing, medical facilities, etc. So there's going to be a lot of public spending in these areas, which again will really boost growth. So that being said, of course, the government is also spending a lot in social development schemes and giving impetus to a lot of poverty alleviation programs. Then global growth in the US has also been high, which is a major region for exports out of South Asia. So these are the reasons which I feel why one is very bullish in South Asia.
So South Asia is looking good for the time. But you mentioned that your companies work in sort of heavy industry and construction, and you mentioned having, was it factories or partners in Europe?
We have factories in Europe, we have factories in France, in Italy.
Can you talk about that relationship that you have with EU countries in terms of how their investment into South Asia, and whether that is something that's picked up or it's something that's slowed down a bit?
Sorry, I didn't get that.
Just your investment relationship with EU. Is it money flowing to the EU or mostly money from the EU flowing into India for development?
So when we made our investments into Europe, there is a lot of synergies that is to be realized by these investments. Of course, initially it was money flowing out of India into EU, but then we have to see that there is a lot of technology there which we can get access to by making these acquisitions, and those technologies, when we bring it back to to India, and we use our low-cost labor and the low-cost manufacturing combined with that technology, so we can actually bring back a lot of skill sets into India. And when we can manufacture the same product in a very cost-effective manner and export it back to these countries, it works very well for both the countries. There's a lot of exchange of ideas, a lot of synergies.
In technology transfer back to India?
Yeah, in technology transfer, and we get the workers from there to come and train our workers. So, what we need to, in India, we need to move, we basically need to move the productivity frontier. So that can only happen if there is a lot of training, a lot of, skilling. So if we can get people from there to come and skill people here, that works very well.
Can I, since we have two Filipino panelists here, can we talk, sorry, that was excellent, by the way. Can we talk about technology transfer and the Philippines becoming sort of a manufacturing base now, and where do you see the Philippines' position going forward in the next maybe 10 years? Whoever wants to go first.
With the manufacturing industry, they say that Philippines is now re-emerging. Recently there has been an index wherein only Vietnam and Philippines had growth in the manufacturing industry, given the tariffs and protectionism that's being implemented globally, and that's again given the saturation of China in terms of the factories, and also they said before China was a factory of the world, and now it's the market of the world, and it's now shifting to, I can say, both Vietnam and Philippines. Yeah.
Burley, anything to add? Yeah, or anything on this list. You're more in the finance? Okay, we'll get.
Or maybe I'll just add.
Toyoshi-san has something to add. Yep.
Yeah, well, talking about Philippines, we have never invested in Philippines, but are very much interested in. The reason, because of its proficiency in English is a public language, and Filipino is very strong in service industry. Wherever you go to the English-speaking countries, we see more and more Philippine people serving for the restaurant, hotels, and very competitive, not only housekeeping. I think as the mobility of the human beings are getting larger and larger, the education with a good educational background and well-trained laborers will become very precious. So maybe Vietnam also has a big cash flow coming from expat, but Philippines as well. So exporting very competitive trained labor to the overseas could be a very good chance for the Philippines. Well, in reality, Japan is in short supply of young laborers. So, but to be honest, Philippine people are already very highly regarded in the international market, and because Japanese is not good at speaking English, they cannot use the advantage of English speaking. So they tend to go to more English speaking market rather than to Japan. In Japan, the new laborers are more coming from Vietnam or Indonesia, non-English speaking countries. But anyway, I have been always looking into the potential of the Philippines as a labor supply, highly trained labor supplying country.
Okay, so
If I may I just comment specifically, I think, on the Philippines. I think most people are aware of the fact that, you know, the BPO sector has grown so much, the business process outsourcing sector. But maybe interesting to highlight what it means in terms of actual growth. So I think the big difference is, I mean, there are two of them. First of all, is that it creates, you localize your jobs. So instead of having people like sending remittances, like we had all these overseas Filipinos, there are people that are staying in the region and they are consuming in a different way. So instead of, you know, basically a lot of remittances go into health and education of the people that stay at home, so to say, whereas now you have younger people who want to consume like everybody else in the world, you know, electronics and stuff like that. I just read recently the largest IKEA shop is about to open in the world, and that's in the Philippines. It used to be the one in Seoul, now it's in the Philippines. And also it creates, of course, a lot of services and consumption out in the region, because you can just open your call center wherever in the Philippines and no longer just in Manila. So I think it's actually been very important for the Philippines and for us as investors looking into equities again on the market. We find new drivers of growth for some consumption gains that we didn't have before. So it's been very positive, actually.
Yeah, good thing Karin mentioned the BPO, because I was about to add that initially BPO industry was the sunrise industry of the Philippines, and the government now studies that it's starting to plateau, given that there are a lot of English-speaking countries that also can do the service. We're actually going from voice to service and process-oriented BPOs, because other cheaper labor can now do also the voice. And to add for the manufacturing growth, I think the Philippine government saw this trend that we're focusing on the logistical infrastructure, where there are a lot of transportation and expressways that are being built, trains, which supports the manufacturing need. Just in my hometown in north of Manila, there are so many warehouses being built, from rice field to now warehouses. So that's what's happening in the Philippines.
But I think I must say, I mean, for call centers, I think the competition will not come from cheaper labor somewhere else, but the competition comes from technology disruption,
Yeah.
and most of
The
the
AI
e-commerce companies
capability.
in China now operate on the basis of AI empowered.
That's actually a great segue into the next thing that we're going to do, which is Toyoshima mentioned that we are moving. China's moving from a manufacturing hub to sort of a services hub, and a lot of the more developed countries within Asia have moved towards that route. Even the traditional manufacturing centers like Thailand, India, sort of, we're moving more towards services. And we have other countries now filling in that void for manufacturing: Philippines, Bangladesh, Vietnam, Cambodia. But that route to development that Thailand and countries like China have taken may not be viable for countries like the Philippines and Cambodia in the future because of artificial intelligence, because of AI and that kind of disruption. Is anyone willing to comment on that? And how we can sort of push back against, well, not push back against AI, but find a different road to development that also employs the workforce, that also spreads wealth equally, and also spreads investment equally in Asia? Anyone want to touch that? I know it's a loaded topic, but it's an important one, I think, because that is something that we definitely have to take into consideration going forward, as not just as individual countries, but as a region.
And we break down the questions a little bit.
Sure, absolutely. Let's start first.
With service versus manufacturing.
Service versus manufacturing.
Well, I think, I look at market transformation, particularly in Asia, of not necessarily just moving towards from manufacturing to services. A lot of the services tend to service the domestic market. But there's also an element whereby if you look at Asia, by and large, we've been a capital importer for a long time. And for many countries, and I put up my hand for Thailand, for example, we've been a fairly insular country in that sense. And we don't really understand the concept of brands, for example. If you ask anybody to name a global brand out of Thailand, I think we would struggle to do more than 2 or 3. I think, for example, you'd say Red Bull, for example, which happens to have gotten there serendipitously through this Austrian partner, for example. Now, the thing with brands and not understanding brands, unlike Japan, for example, who really has very, very strong brands, and then Taiwan and Korea and so on. But the rest of Asia, not really. So I think there's that reform element of understanding the concept of brand equity as well as services, not just purely manufacturing, for example.
Okay. Anyone has anything to add there?
I'm optimistic in general. I think about what I see in Asia about the possibility, the capacity of people to finding new jobs, new sectors, new services. Because I think of course, we always need to learn from history, but at the same time not get stuck because the world has changed. So what people are worried about, I think, in Asia, for instance, is when you see how much China has been able to do by basically moving in a lot of people from farming, agriculture, into production, manufacturing, because it doesn't require too much skills, so to say, to go from basically being a farmer to being a factory worker. Whereas in places like India, well, you can wonder how is it going to be possible for this huge population, which still is depending on agrarian, to move into, you don't move directly from a farm into a research center for AI, obviously. So it's a question of maybe a couple of generations and maturation of and education, obviously. But I personally think that when we're looking at the world, how this thing's going to be in 10 to 15 years, I think there are a lot of jobs we don't even understand exist, and they will find ways to fill up and make a situation where the society will not be like with 40% unemployment and people potentially in the streets. So, but maybe it would be interesting to hear what in India how they see this challenge, because I think it's nowhere but in India it's actually the biggest challenge.
Well, yes, in India, like I was saying, that we have 17% of the world population. Now, in terms of challenges, yes, we had, we have resource constraints, lack of education. Now we see a huge opportunity that now that we are growing, that instead of moving from the farm to factory, we can actually move from the farm to frontier model because of this technology, AI, etc. This presents a huge opportunity for us because now we can look at the digital frontier, the tech frontier, because India has a total workforce of 484 million people. Informal jobs are almost 409 million, and formal private sector jobs are 60 million. So now factory model is not good enough. We need to improve the skill sets of individuals as well as their participation in world-class supply chains. So in order to increase the per capita GDP to $8,000 or $10,000, because as we look at moving towards a $10 trillion economy by 2030 or so. So in order to leapfrog, we need to equip people with tools. So once we plug them onto the technology platform and their skill sets improve, we can make them much more productivity. So the traditional manufacturing as we knew, and the traditional, the high-cost manufacturing, it has completely seen a paradigm shift because of this 3D, etc. So now we actually looking at it from a different angle. Because of 3D manufacturing, we don't even need to really skill the people because the machines do most of the work. So moving the productivity, like we said, now if we move from the farm to the frontier model, it has become so much easier because of technology, because of artificial intelligence. Earlier you needed skilled designers, you needed skilled manpower, welders, but now with the machines having coming in and artificial intelligence coming in, and with the Internet of Things, it becomes so much easier because human capacities and capabilities are augmented by machines, by artificial intelligence. So, and with our with a huge advantage of our demographic advantage, we can really capitalize that by giving people the opportunity to partner with these kind of technologies, etc., and really increase the productivity. So that is a huge opportunity.
Okay, thank you.
I'll just add for the service versus manufacturing.
Sure.
What I observed with the service versus manufacturing, first is about risk management. So with service, they are less capital intensive than manufacturing. So they invest on countries that has high. An investor would invest on a country with a high risk, while focus more on the service than the manufacturing. And another factor is the English speaking capability, wherein my profiling with the countries with service, Philippines, Indonesia, and India are more of the service-oriented countries wherein they're good in English, while Thailand, Vietnam, and China are more from the manufacturing industry, wherein they have labor cost is low and infrastructure, which affects the cost of goods sold, the freight, power, and all. So that's how I think investor decides on what country or what industry we will be investing in.
Okay, perfect. Anyone to add? Or should we move on to the next topic? Okay, I have been on 4 panels in the last, let's say, 2 months, and Trump comes up in everyone, and I promised myself I wouldn't bring him up, but unfortunately we might have to. There is a trade kerfuffle, I won't call it a war, between the US and China currently, and the US and many of its allies currently. And I just want to ask briefly, how has that ongoing trade dispute between those two countries impacted investment within Asia? And this is open to everyone on the panel. Does anyone want to take a stab at it? Has it impacted? If it has, how? If it has not, then that's an answer as well.
I start with a, I would say, high-level comment on that, saying that it's, of course, creating a lot of uncertainties, and investors do not like uncertainties because it makes it more difficult to forecast and plan. So I think even on the, now I'm talking about on the company, like investment side, we see a lot of companies we invest into who are telling us that they are postponing important capex decisions. I think what we've seen actually so far has been very little, because we've seen only actually even companies doing a lot of front loading, for instance, of orders. So the macro indicators coming out from China, for instance, have actually been quite strong. But you shouldn't think that it's because they are resilient, it's just because there's been a lot of front loading. And the uncertainties if they are staying, I mean, they're here to last for longer, then that's where the real impact will come. So clearly, there's been a lot of impact, and there's a lot of discussions, obviously, about in what way some industries, will be benefiting from relocalizing, for instance, some of the production capacities into other countries. Vietnam here comes as, of course, a perfect example of that, because Vietnam could benefit, obviously, from that. But at the same time, in a situation where I think it depends on the definition of what's going on. If you think that it's only about America first and global trade problems, Vietnam then will not be immune, because Vietnam also run actually a huge current account, a trade account surplus to the US. So it could be the next country to be targeted. But if you see and analyze the situation as being more of a China versus US story, then obviously there will be some other opportunities for some countries in the periphery that would benefit from not being China, or benefit from getting investment from China. I think the visit of President Xi Jinping to Manila last week was quite a good example of that, for instance.
I'm gonna Kun Pakun, and then I'm gonna call on Burley because he hasn't said anything. But Kun Pakun first.
I'm going to quote somebody anonymously, in part because I don't want to name drop, nor do I want to quote him without his permission, but he's considered the Pope of private equity. And very recently, I was in a meeting with him together with a Chinese-Thai billionaire, and the billionaire asked him, just what do you think about this China versus the United States trade war? And he said, firstly, it's not good for anybody,
Okay.
but he thinks that the United States will win on this one, in the sense that the US GDP is about 3%, unemployment has dropped substantially, the financial systems looks a lot more fixed than, say, China. And this Thai Chinese billionaire piped up straight away and said, but China is going to do its own domestic stimulus if they can't export these products. And the private equity guy said, yeah, but for how long? Because the non-performing loans in the system, where as you read $1 trillion plus of NPL, is more like 3 to 4 trillion US dollars. And therefore, with the capacity unabsorbed right now at maybe 60% utilization rate, China will probably will be problematic. That having said, they did talk about other countries being a beneficiary. And here we've seen some pockets of here and there where the supply chain moves away from China into other Asian countries. But that having said, supply chain tends to be pretty sticky. It's not that easy. It's there in the first place because of the comparative advantages. And it's not just labor, it's skilled labor, for example. It's just not as easy to shift from one country to another. It's because of the commodities that those countries are able to supply. So all these points are likely to affect even US companies. And there's some estimate is that it could affect about possibly shaving off 0.5 to 1% of GDP growth in the United States, which is quite significant considering that the US is the 3% economy. And here we're talking about a country that's winning.
Right. So it's not good for anyone. Burley, do you have anything to add on that? No? Is there anything you want to touch on before we move on?
Maybe the next question, so.
Okay. Toyoshima, do you have anything to add on because you're involved with China directly?
Okay. I think we are talking about the production side, technology or manufacturing services, but the business model, the recent business model is everything is coming from the market. So basically, the size of the market you can capture determines the value of the businesses. And one of the obvious secret with China is they did not allow Facebook, Google, Apple, all these companies to operate in their territory. If that had been liberalized from the very beginning, maybe there was no Baidu, no Alibaba, So this brings a very sensitive question. It's not only about Asia and US, but even the EU is tightening the protection of the private information or the right to be forgotten. So I think there will be some swing back, like the pendulum of the setback to the overutilization of the market dominance using the tech power, and which is very important for the politicians to stabilize the domestic politics or the society to some extent, and to what extent that kind of intervention will be done. China was an extreme case, but they could do that because they had a 1.4 billion population. Maybe India could do that, I don't know. But for the other countries, even Japan, just 100 million, 120 million population is too small to do that. So in these countries, but the lucky thing about many Asian countries, they do have maybe 60 million, 90 million population. So how to be the wise user of the high tech and to really cultivate the shift up the living standard of the local economy will be the key for all the Asian countries to stay in harmony.
Okay, thank you.
For the Trump issue?
Oh yeah, perfect.
Yeah. Earlier we were discussing about the flow of capital inflows, of the slowdown and the direction and trends. I think right now the geopolitics is now more correlated with the investment and economic.
Sorry, could you repeat that?
The geopolitics
Yeah.
is more now influential or has more correlation with the economic trend or investment. For example, I mentioned earlier it's West going to Asia. I rephrase it with this topic. It's EU going to Asia, except US already, because there is a protectionism already with the. Although I can see that the US, the politics and the business side of US are separate. The politics side, they're more of protectionism, but the companies of in the US are more of still the progressive and investment. Another is in terms of impact with the China-US. First, the direct impact would be affecting the manufacturing countries, which China. And with the Philippines, we have an indirect impact, given we are a consumption economy. And I can say the rest of the Southeast Asia are more of a consumption economy, given that their economy is based on service, then focusing on consumption. So what we experienced is we had more higher inflation, given the friction between China and US, which initially a few months ago the oil went up, and now it's going down for about the supply issue. So that would be all.
Thank you.
But
Okay.
just one last comment. I think, as it was said now, a war usually you say is bad for both parts, and I think there will be like injuries on both parts. But you have to understand as well, this is a long-term thing. This is a huge trend we're seeing in terms of tensions between the two larger economies in the world and one which is clearly threatening the incumbent one. So, but I think in terms of when you look at who would be winning eventually this war, I would personally put my money on the side which is the longest term thinking, longest term planning. And in the case of the US, what we're seeing now is not only a question of a more aggressive policy towards former partners or just other foreign countries, but we also see an economy or a system which is clearly very not in harmony. I mean, that's the least you can say, and a lot of domestic infighting. And even if Trump wins the second mandate, he's gone in 6 years. So if you compare this to the way I think China is considering its own development and its own strategies and priorities, I think again, Chinese might just think, okay, we just
Ride out the storm.
ride on this storm, and things will get better afterwards.
One of the benefits of being president for life is you can ride out the storm. Okay, let's sort of reset and go back to some of the questions that Frank wanted us to discuss. Two of them would be, what are the regional hotspots for investment in Asia, and how best to stimulate the current investment climate, which might be slowing down because of trade wars and political infighting and instability. Burley.
Okay. The regional, I mean the best regional spots that we can invest in Asia, based on my my study. One is Malaysia, because Malaysia has their assets are selling in a steep discount, and what else? Then Cambodia and Philippines.
Surprising, Philippines too?
Yes, Philippines. Yes, because one is we are the BPOs there, and Philippines have the English language or fluent in English. Yes.
Anyone else? How do we stimulate the investment climate? Trends? If not, we're going to move towards audience questions. Okay. Oh,
Just one thing I want to add is that surprisingly, there's a huge amount of U.S. capital coming into Japan. Under the trend of corporate governance and stewardship, many Japanese public companies are forced to restructure, and there will be more and more consolidations going to take place. And also traditional manufacturing industries, just look at Toshiba, they are very underpriced for the cost of for the investment amount they had made to come to that point. So these companies, traditional companies, are becoming the good target of M&A, TOB to be consolidated. I think that trend will come to various Asian markets in the future as well. There are so many undervalued, other than the high-tech companies, there are many undervalued stocks in Hong Kong, in Singapore, and they cannot be like that forever. So it's not a growth per se, but it's a area where the big amount of money is flowing in.
Another thing.
In terms of regional hotspots in India, also I mentioned earlier, there are a lot of developments, positive developments, which are taking place, including we've started this drive called Industry 4.0, which is creating a complete ecosystem and the use of automation, technology, the Internet of Things in manufacturing. Apart from that, we've also got this Make in India campaign, whereby we are giving a lot of thrust to Indian manufacturing, and even in defense we've got this offset clause whereby a certain percentage of the manufacturing, even when we import items, it has to be done in India. That way we are building a lot of capabilities in India, and there is a lot of infrastructural work going on in India, especially if you see the capital city of Amravati, which is being built in Andhra Pradesh, along with in close collaboration with Singapore. That's actually a model city, which will set an example for urban development all over. So that in itself is a big sign of things, the way things are moving in India. And I see that and also there's been a tremendous growth of startups in India, which as you recently saw, Indian startups are being valued like Flipkart, how it sold only a part of its stake for $17 billion. So India, I see a lot of positive development, and there's been a big boost in skill development, etc. And also digitization, the UPI, and the fact that now, we are coming up with the largest a medical insurance scheme in the world, the health insurance scheme called Ayushman Bharat. So yes, we see that India could be a regional hotspot, as you put it, so in Asia.
About hotspots further. Sorry.
No.
Okay.
First and then
Another trend that I observe in stimulating investment is the lessening of foreign restriction. This would be general, regardless of what country. I observe that, which is now being pushed in our country, because currently we have a 60% local and 40% foreign restriction in terms of land ownership and even company. Actually, you cannot own the land, and in terms of company ownership, just 40%. And I believe there are also other Asian countries that have similar restrictions. And for example, I know Hong Kong, way before they removed the restriction, that's why the economy went up and developed. And another is, again, general of any country would be, this would be the profile that wherein investment is attractive. Countries with high remittances, tourism, and business process outsourcing, wherein the money comes from outside the country, and then it boosts the consumption of the local economy, which directly benefits the manufacturing and the real estate. So I observe that investors are focusing on those countries with those profiles.
Thank you.
Yeah, no, I just wanted to say quickly that I think just to echo Ms. Bajoria talking about the interest being in India, I think beyond India is also Indonesia, and right here is Vietnam. And if you look at it, they're all correlated to high growth markets. Although that having said, the valuations of these countries are a little bit higher from the growth premiums.
Thank you. So, just to conclude, everyone invest in each respective country of the member speaking. Okay. I'm going to open up the floor to questions, concerns, comments for any of our panels, or if you feel you have something to add, I'm more than happy to hear it. We have about maybe 20 minutes for that, so anyone? We have a question in the back? There's a microphone right next to you.
So I have questions going back to your comments, Mr. Alvarez, on when you were saying the hotspot for investments, looking into Malaysia, Cambodia, and the Philippines. Can you kindly elaborate more on why in your opinion, it's more of a hotspot for investments? Yeah, Malaysia, Cambodia, and the Philippines within the ASEAN.
Yes, yeah. Here I have a note. Malaysian assets are selling at a steep discount despite a generally strong economy because of several reasons. First off, the nation's currency is near its lowest level in decades. Exchanging foreign currency into Malaysian ringgit and buying local assets is a better deal than ever before. Second, prime real estate in Malaysia is among Asia's least expensive.
Yeah, and for Cambodia and the
With
Philippines?
Cambodia, it's one of the Asia's least developed countries, but among its fastest growing too. This small nation is in the heart of in the China, progressed rapidly over the past few decades, and is now open for business, like many other frontier markets. Cambodia has a track record also for the recession. They don't do recession in Cambodia.
So a bit, both a comment and a question. I think the comment is, I think there's an opportunity now to break the stereotype about investing in Asia being a phenomenon which requires dollars from the West to come into Asia. I think the Asian economies and the way people behave from a savings perspective is one of the highest in the world. So I think an ecosystem needs to be created wherein Asia starts investing in Asia in a bigger way. And I think we have to conceptualize models which allow for sufficient liquidity and sufficient depth, alternative structures, markets, whereby private and public investment can take place effectively within Asia. Savings rate is high, growth is high, people think the same way, exchange risk is lower. So I think that's a thought which merits significant attention from all the regulators and the government, and I think there's a huge opportunity which exists here. So not really a question, but a comment which I thought could actually trigger a lot of debate here, because I think it's relevant to take
Absolutely.
the prejudice around investing from the West into Asia away.
I think it's a great comment. Thank you for making it, because again, if you look at on the public equity side, emerging markets, there's different ways of defining them. One of them is the fact that they are of course very volatile and so forth, but they're also usually very dependent on foreign flows. So the emerging markets which eventually are the more interesting ones, are the one where you have a solid domestic investor base. And this solid domestic investor base usually has to be created by reforms and governmental efforts to, for instance, as I was mentioning, doing pension reforms and so forth. So it's very important, and I think you could eventually apply the same rule regarding on the private equity side or any kind of private investments. If you have a good ecosystem, if you have a good regulations, stable environment to make business, ease of doing business, well, it's not only foreign companies that want to invest, then it will be your, your local ecosystem. So I think it's a very important comment indeed.
Microphone.
First time has moved to the top 100 in the ease of doing business ranking. And so, like what you were saying, so that itself should be a very positive sign for investments.
Yeah, you mentioned also the West behavior going into Asian behavior. I believe we're in Southeast Asia. Southeast Asia is building an ASEAN bloc, which is they're hoping to modify to imitate the EU bloc. Actually, personally, I'm not sure if it is a good plan. From a comment, I'm actually throwing this out with the panel as a question. If having an ASEAN bloc similar to EU bloc would be a good.
Are there plans for a common market though? I don't think it's in the works currently. No. I think it's still. I think we're still a few years down the line. I think our non-interference policies might have to take a closer scrutiny if that were to be the case. Gentleman in the orange tie.
I'm Shibu. I run a co-working space, Hat Spaces, in a small place in Kerala. Kerala is a small place with a lot of intellectual capital. I think Mr. Bajuria has covered what India is at large, but I'm from a place which got a lot of intellectual capital. So once an investment banker mentioned to me that if you take $1 million in loan, it's your responsibility to pay back. But if you take 100 million in loan, it's the banker's responsibility to take it out of you. Okay. So my question is simple. My question is, how do we make sure that the investment flows down to the last mile? Are there new methodologies? Is there any movement towards making sure that the investment reaches the right kind of entrepreneurs down to the last mile? So what's the movement on that scenario?
So I believe the question was, how do we ensure that investment gets to the right entrepreneurs with the right ideas, and how do we ensure an equal access to capital for the small players and the big players? Anyone want to take a stab at that? Toyoshima-san.
When talking about the investment, we need to separate the business investment, the investment by the company to do some operational investment, and the financial investment, where the investors, the fund is in between, like us or us. And for the financial investors, if you invest in the company, what you have is just a registration of the stock. And usually it is difficult to communicate in the local language. So it is very difficult just by holding the stock of the small companies in the emerging market. So the transparency and rule of the law governance, all these things is definitely needed. And even all these legal mechanisms are there, eventually the investment fund need to find a way for exit. What's the best exit? Well, typically people want a company to get listed, but that's not always the case. We invested in various Chinese companies. Some of them got listed in the early days, but there are too many Chinese companies waiting in the queue. But as she mentioned, the Chinese economy had developed more and more, and there has become more savings domestically, and there has become more stronger companies. So there were many trade sale opportunities when the business is good. There are other Chinese companies who want to merge them. So that kind of cycle is definitely needed, and eventually I think to attract, if it is about the foreign investment, to attract the foreign investment, eventually the country's economy need to grow as well simultaneously.
Maybe I'll add to that in the sense that there's already a fairly well-established concept as asset class, and the asset class is public equities, fixed income, private equity, growth capital, venture capital, and so on. But as you, I think the question you're asking is that how does it come down to the last mile, meaning the small guys, the people who have ideas and want the ability to access capital. And traditionally, there's in the area where you try to institutionalize that, there's a concept known as an acceleration or accelerator, where you're given $50,000 and let's go figure out it might go away, something might work, and then you progress on to capital from friends and family, for example. And in that area, I think the institutionalization concept is known as crowdfunding. So there is something going on there that is helping, driving the capital towards the smaller guys, with the entrepreneurs with ideas.
Can I just play the devil's advocate for a second? You did mention something about Asians lacking a sense of brand earlier. And part of that is because most investment capital coming in Asia are involved in things that are very local, like I'm going to use Thailand because we're familiar with it. Investment capital tends to go into real estate, into legacy stocks, into large corporations, whereby we forego the smaller players who might have a more brand-centric approach to things. How do we bridge that gap? Is there a way to bridge that gap where instead of crowdfunding, instead of startups, we do funnel foreign direct investment, the government takes some sort of step to funnel some of those investments towards smaller players with big ideas? Or is that not the government's job? Is that not, it's the job of the smaller companies to go out and fend for themselves?
I think it is in part the government's job to some extent, depending on what view you take, in regards to trying to catch up with the innovation. I think in Thailand, for example, they have various funds that try to promote the ecosystems in terms of just paying simple people like I don't mean simple people. I mean simple businesses like accounting, for example. Like if you had a startup, you can actually take a grant from the NIA in Thailand to go and pay for accountants, to pay for lawyers, to pay for things that's related to ecosystems that otherwise entrepreneurs don't have the capital to put all of these things together. And of course, some government-sanctioned venture capital funds. And I think it's the same way with China as well, and here in Vietnam as well. They have the same sort. So I think it is in the interest of governments to help push their nations towards becoming more innovative.
Other questions? We have two at the back. We'll take them both and we'll try to answer them.
It's not a question, it's a comment. I think we should not underestimate the power of digitization that is happening around the world. And countries, I agree with this gentleman who said about Vietnam and Indonesia as investment destinations, and of course India will be there. I don't think any other country in the world has created a unique identification for over 1 billion people, about 1.2 billion, I've got a number, and the power of that number is amazing, what it can do, this thing. Secondly, I think when we spoke about FDI, FI, today in India at least I can tell you the stock market doesn't depend on FIs anymore. It's all domestic investment, savings which are going into the stock market month on month, and it's actually one of the best performing stock markets today. Around the world, if you look at the Indian stock market, has been pretty stable, giving good returns to its investors, etc. So I think the point is sometimes we get dated in time. We feel these countries have been growing much faster. I think they are catching up. And with the power of digitization and e-commerce, Vinita did speak about UPI. In India, India's adopted UPI for its banking system and it's going much more. They're going to bring the transaction cost to almost zero. So, just see the mobility of money that will actually flow around. So I think we need to see Asia having its own confidence in itself and not being bothered about the West. I think we have to create our own business models which are going to be agile and which we can take on, and over a period of time brands will get built. I think it takes time. I mean, all these countries have built it over a period of time. I can see the future brands coming out of actually Asian economies, whether it's China, Vietnam, India, wherever it may be. Yeah.
Thank you. The gentleman next to you.
My name is Ivan from Awinas Energy Indonesia. We have been doing cross-border investment related to renewable energy and environmental business for the past 9 years. And I think my question that I would like to throw in the discussion today is Indonesia last year, for example, realized $32 billion of FDI, which is increasing 8.5% compared to the last year. But I think we're still losing compared to Philippines, Thailand, or even Vietnam. I think one of the reasons is because the lack of the capacity of our regulatory and also our politicians to create investment-friendly regulations or ecosystems. So I would like to know from your point of view how actually, for example, Indonesia, with all the big potential that we have, for example, renewable energy, we have 443 gigawatt of potential, but we cannot realize that to the full amount. If you have any views on how we can create a more investment-friendly kind of ecosystem in terms of regulation and policy, that would be greatly appreciated. Thank you very much.
Okay, so if I'm understanding your question correctly, it is how can Indonesia create a more investment-friendly atmosphere for outside investors? I want to add on to that and not just touch on Indonesia, but how difficult is it within Asia to get past non-trade barriers now compared to where it was, say, 10 years ago? Because it was a major issue towards ASEAN integration 10 years ago. And I want to know what our panelists think of NTBs now. Anyone? Non-trade barriers? No? I was just trying to recap your question, which was how can both local businesses and I'm assuming the government create a more friendly atmosphere towards investment, towards cross-border investment? Huh?
More certainty, less changes.
More certainty, less changes. Is that something that should be touched upon or something else? Okay. We have the gentleman from a Spanish university down at the end.
Sir, I just want to ask this question because I think you have great questions and some of them might go more towards economists probably answering that. So since we've got people who are really in the investing space and you've asked about what are the hot spots and each one of you have your interests and of course you want to promote your countries as well. But I want to know what are the areas that you're seeing investment going into. So is it a specific industry or is it something that country could be branded as? So I don't know, probably you say India and you say, okay, in India, probably the IT industry, or maybe that's just generalizing again, because with digitization, you don't need to go to one specific country, you can go to frontier markets as well. So are you seeing any trends towards specific industries or specific areas where there's higher investment coming from the West than others?
Floor is open.
I think we have to separate the aspect of foreign direct investments versus just investments in general. If you're talking about foreign direct investments, of course, countries that require infrastructures investments, power, for example, would attract a lot of capital coming into these countries. Unrelated to whether they're innovative or not. It's not always necessarily renewable energy or anything of that sort, or sometimes they are, like wind and solar, for example, here in Vietnam, for example. But the same ways with Indonesia, where there's a lot of requirement of capital to fund the infrastructure-related projects. Again, you have certain countries in areas of transportation, whether it's high-speed rail. It seems that every country at one point or another, wants to implement their high-speed rails projects, for example, as part of stimulus. But it's things like that actually attracts a lot of the heavier part of the foreign direct investments.
Can I just supplement?
Let's go to that gentleman first, and we'll come back to you.
Our company invests in FDIs as well as technologies and digital.
Can you identify yourself and then say where you're from?
So to answer your question, the digitization of hard assets is one of the things that we look at. For example, in real estate, the tokenization of real estate is what we look at. We look at investments that raises the capacity of the poor in the country is what we look at.
Okay. Did you have something to add?
So
real
I
quick?
just wanted to, I think when we, gentlemen out there spoke about industries, I think industries are blurring now. We can't look in the industry in the traditional way. I would like anybody to answer me, what are these e-commerce companies? Are they trading companies? Are they technology companies? Are they logistics companies? All these new banks that are coming, are they banking companies or are they technology companies? I think industry lines are blurring today. If investments are going to go in the way I'm seeing the investments going in various parts of the world, it's going into anything which has a technology angle to it. It's not about IT, but anything that is technology driven is going to attract investments to go in there because people want efficiency. And efficiency and making sure that you get the product across at the best price to the customer. And I think customer acquisition has become the center of all companies today because the cost of customer acquisition is so high, logistics cost is so high. So anybody who's working on these two areas, logistics and customer acquisition, and that's where technology is coming to play a big role in moving, whether it's artificial. I've seen China, the way they have used artificial intelligence. I think the world has a lot to learn from there. So I think many other countries, whoever, actually if you ask me today, anybody who comes in, the first mover advantage is no going to be there. It is going to be how you're going to use the technology to catch up with somebody else. And I think Vinita, you spoke of the fourth industrial revolution. I think that is going to be a level playing field for a lot. I think we have not, the story is not out yet. The jury is not out. I think it's going to, I don't know whether Asia will come out, who will come out, but who will actually adopt the technology and execute it. I think that region or that country is going to actually succeed as we go forward. That's my view.
Thank you. Karina, I want to come back to something that the gentleman said earlier, which was what are those hotspots industries that we invest in? Obviously, as a capital firm, you offer your clients several options of where their money is going to go. What do you see as the biggest trend? Where do people really want to jump on board, and where do people say, okay, I'm going to stay away from that fund?
You might have realized I was very silent regarding regional hotspots because it's just we just don't see anywhere in the world as being, oh, this is the country I want to invest into and this one I don't want to invest into because
or even industry.
We're very much bottom up, so it's depending completely on the quality of the stocks we invest into, but of course you want to see and we're also very long term. So one of the key rule for us as investors is always thinking like when there's a big problem, usually there are solutions. And one of the sectors which we find being the most attractive is actually related to the environmental protection sector because any issues related to pollution, climate change and so forth are not only on the forefront of the agenda for investors but also for populations, for regulators. So we're seeing a lot of investment into this space. And there is no better place for us to play that than in terms of public equities as in China, because China is today both the largest clean tech market in the world, but it's also the only market in the world where you have on the stock market, we identified around 350 companies which are solution providers to the environmental challenges of China. And the focus of these companies has been very much on China, but we know that they are also, some of them already are global leaders and will become as well, solution providers to air pollution problems in India or other places. So that's one sector, one theme I would like to highlight. But it's for us, it's actually the only theme we have. Everyone else, every other funds we have are, either like global emerging market, global frontier market, or regional funds like Eastern European Fund, Russia funds, and so forth. So we only have one thematic strategy, and that's an environmental strategy.
I think she mentioned although I just learned that from you now, which validates what we do in our company, wherein there's a trend globally, not just in the Philippines, about going green into going green at the same time doing business. For example, in terms of the logistics in the Philippines, everyone's going from plastic to paper given the trend of the anti-plastic campaign. And in the Philippines, it's illegal to do illegal logging, and that's why we're trying to go into business that supports the industry and at the same time the climate, which at the end of the day, we're not just entrepreneurs here, but we're humans, and so we need to be responsible with the future of the Earth.
Thank you. That was great. I think we have time for maybe one or two more questions, and then we will wrap this up. Thank you. Yeah, go ahead.
Okay. Hi, everyone. Thank you very much for giving me a chance to have a question. So this is about the investing in Asia. So I'm coming from the Myanmar, which is also one of the latest market in the ASEAN country. So most of the people say that among the Asia, ASEAN is most integrated economy. But among all other, Myanmar is also one of the potential market. But now most of the people from outside just reluctant to come to invest in Myanmar. But we have a lot of chance in terms of the population, in terms of the land. Myanmar is the second largest in ASEAN. And so, but now everything is moving into the technologies. We are a lot of behind the other. So we have to take everyone in terms of the technology to reach to the industry 4.0. So my question is that from all of you, as an outside investor, from the point of our government, which area we have to be relaxed, more liberalized, to invite the people from the outside to make the investment in Myanmar? Thank you very much.
Okay, so I believe the question is, what as Myanmar is a growing country and there's more investment into the country, what can it do to catalyze investment, and what areas should they focus on to attract more investment going forward? I hope I summarized that correctly. Does anyone?
Could I just jump on this question again, back to on the public equity side? Of course, there have been efforts. There is now in Myanmar, there is a stock market, there's a stock exchange, but for investors like we cannot invest yet because you don't have yet an ecosystem in terms of, for the settlement, for the custody. So it's on our list, on our radar, because we do think, as you said, it is potentially a very interesting country to make investments for all the reasons you mentioned. But I think it's going to take us at least 5 to 10 years before, except if we see, major efforts being made by the government and the regulator. But our company's capital, we are specializing in difficult markets. We made investments in places like Serbia, Montenegro, Slovenia 15 years ago, at a time when people didn't even know there was a stock market. So, and still, today, Myanmar is completely off limit for us because of its issues related to custody, settlement, and the overall way of investing and holding Myanmar shares. So the way we invest when we want to is through indirect investment. Obviously, there are some listed equities in Singapore and other places which gives you exposure to some investments and markets in Myanmar, but it's not the same, obviously, as actually making investments in Myanmar.
So perhaps maturation of the legal processes needed to ensure safety for the investor, I think, is the answer. Any other questions? I think we can take one more, otherwise we're done. Do you have a question? Your microphone's on.
Yeah. I think generally, if you look at countries' development, just taking inspiration from other countries, I remember Mr. Lee Kuan Yew quoting these numbers about 10 years ago, and he said that part of the reason that China is more interesting than, say, Korea, than, say, India at the time, was because in China, the legal recourse, when a company goes bankrupt, it takes about 11 months in the court process to foreclose. In India, at that time when he spoke about it, it took 2 years and 8 months. And if you look at what India has done over time, it's helped a lot on the recourse. So I think if you're thinking in terms of foreign direct investments, people would be concerned about those type of risk as they put that capital into those countries.
Okay, one last question. Hope it's a quick one.
Hi, I'm Gian from the Philippines, and I'm from the startup community.
Okay.
So a lot of our startups here in Southeast Asia, in the Philippines, we look out to the US, to the West. The nearest actually is we look out to Singapore and China to look for really mature accelerators and for funding opportunities. And we know that the investment maturity here in Southeast Asia is not yet at that level that we'd really like it to be, as it is in Silicon Valley, in China and Singapore. My question is, what would it take for our investors here in Southeast Asia to reach or even get an inch closer to that level of maturity?
Burley, I'm going to leave this one to you since you're involved in finance and films. What would it take for even companies such as yourself within the Philippines to invest in the startup market? What needs to happen? For the Philippines, for other countries in the region, what needs to happen to foster better investment? In startups. Yeah. Well, what would prompt you to invest more in startups? Is there anything that startups can do as a whole, as a community? So the question is, what can startup companies do to get investment from you?
A startup company will do?
Yeah. What can they do? What can they provide to be attractive to you to invest in?
Of course, the capital first.
Okay. So they have to have some standing capital.
Yeah, capital. Yeah.
Okay. Does any? Yeah. Falcon, please.
I think, as I mentioned earlier, a lot of the startups, when you go out and try to get the first round of capital, tends to be known as a seed round, and a lot of that tends to come from friends and family. And now you're seeing from corporations, if that's what you're asking in terms of whether they're making these investments, one answer from the corporations, and they're still trying to find some solution to this, is that they've set up this thing called CVC. You might have heard of that, corporate venture capital, right? But I see that as still being something that's very decoupled to the strategic elements as to what those companies are trying to go after. They tend to look at it as if they're behaving like a venture capital. Most of the times, I have not seen a lot of successes. My experience as a banker, 20 years ago, we would look at things like bubbles, okay? With the sector being foods this big, retail being this big, telecoms being this big, oil and gas being very, very big, and they were all very separate. So as bankers, we were energy bankers, we were consumers bankers, we were foods bankers and proteins and so on. Today, if you think about it, when you went to high school, the Venn diagram, right, where market crosses with technology, the cross-section is technology disruption, and that's where a lot of people are trying to find the answers to that. So a lot of corporations today need to think through that cross-section of technological disruption in trying to how they put that capital to work in in startups to provide strategic solutions to them.
I think we're in the right direction. Thank you.
Just to add, actually, I really agree with what Pak Pum mentioned about Asia not being good in branding. Wherein as an entrepreneur with a tech startup, it is really crucial that when you create a company or a service which given the solution of a problem, you don't just think local. You think on implemented it globally. Again, profiling the different Asian companies and brands. Old companies or old brands like Samsung, Toyota, they've been there for so many years, and that's why they're big. But very few Asian companies, new Asian companies or brands are growing in a global scale. One thing that we can do some studies to Grab. There is Uber, and Uber is globally it's a big company, but Grab was able to create, and I believe it started in Malaysia, right? And it's now monopolizing Southeast Asia, which is we need to have similar Asian new tech companies like Grab. Wherein first branding should have a global taste, global attraction. So which is easier with tech. And now it should also be technological scalable. I have a friend, an entrepreneur also. He's doing a dibs parking. That one is about like a Uber for parking. So there's a difficulty in parking in the Philippines, and they're trying to roadmap in going to Indonesia. And so, as an investor, probably as an entrepreneur, I will invest on a tech company that won't just focus on the Philippines, but would be ready and has a plan going to Southeast Asia and globally. Yeah.
So, room to scale and good branding is the conclusion there. Okay. Oh, one more. And then I think that's it.
In terms of branding, I don't know if Atul, who is a member of Oasis, attending this session. Atul is not here. Well, actually, Atul is the founder of the India International School. They already, I think, operate in more than 20 or 30, nearly 30 locations. Middle East, Japan, of course, Singapore, India, everywhere. They have really brought the brand of Indian science education, English speaking capability, and mathematics, everything together, programming. And they started as India International School, but they branded out the One World International School, which is catering the education to non-Indians. Which is very, very popular, attracting a huge number of students, and they are very competitive in terms of the placement record they have with the Ivy League universities or British universities. So I think if they do it correctly, there's a good respect into Asian brand.
Awesome. Okay. Everyone, please give a hand to the panels who are excellent today. And I think we have 30 minutes for coffee and tea before the next panels get started, and there's a bunch of great speakers lined up, so I hope you join us. Thank you for Oasis for having us, and thank you everyone for attending.